Welcome back to Closing Bell here on Cheddar News. Now, after a booming 2 pandemic-era years and over a decade of growth, the tech sector is slowing down. Last month, roughly 17,000 workers worldwide got laid off from 71 tech startups. That's the highest number since the early panic of the pandemic in May 2020. So, where does the sector go from here? Joining us now is Mark Peter Davis, managing partner at Interplay, an investment and incubation firm. So, Mark, what in the world is going on?
Well, I think this is kind of to be expected. From a macro perspective, the economy was in seventh gear for quite a number of years, better part of the last decade. And with the government essentially raising interest rates, sucking capital out of the economy, we're downshifting to something more like fifth gear now. So the impact of this for the startups out there is it's going to mean they have less access to capital. And they're also going to anticipate lower revenue growth rates. So the operations they had when they were planning to raise more capital, grow at any cost, and essentially scale up in the coming years, those operations don't make the same amount of sense as they used to. Now, so they are right-sizing these companies to adjust to the market.
Now, most of these layoffs happened at startups. Are the markets they're trying to disrupt oversaturated, do you think?
No, I don't think this has anything to do with the underlying business opportunities of the companies or the markets they're in. Startups tend to be pretty agile in recalibrating to market moves. I think we're going to see layoffs more broadly through the economy as a lot of companies are recalibrating to the new paradigm where we've got higher interest rates. There's going to be slower growth. There's going to be a number of things that come with this as we potentially enter into a recession. So I think overall, this is a rational right sizing to the change in the market. I do want to point out, I think this is very different than what we experienced in the global financial crisis. If the parallel here is this is shifting from seventh gear down to fifth, the global financial crisis was akin to a piston exploding in the engine. No one knew if the economic model would work the same way or would continue to function. That is not what's happening here. It feels very much like we are very structurally slowing down in a controlled way, manifested by government decisions.
Let's move away from startups. So tech giants like Facebook, parent company Meta, also freezing hiring. So what does it say when even the sector's biggest players are facing these difficulties?
Yeah, I think they're really facing a different version of the same story, where the startup companies know that there'll be less venture capital available in a slowdown market. The public companies also know this. Their valuations are coming down. They're not able to sell stock at the same price. Net result is they're going to have less access to capital and are buttoning up the organization essentially to manage for slower growth in a smaller business. I think some of these organizations have different prospects long-term than others. The separation between those that do well coming out of this recession and those that don't are really going to be a reflection of those with good underlying business models. Companies like Google, Amazon, Apple, Microsoft, I think they are in a great position and are going to continue to scale after this.
Now, was pandemic-era explosive growth a lucky catalyst for these companies? Would they be in a different spot had the pandemic not happened?
Yeah, there was something called counter-COVID that a lot of the tech community was talking about. Businesses that actually thrived when people were in lockdown, right? They were forced to shop more online. We saw a spike in e-commerce. A lot of internet businesses basically got a little bump from this. In addition to that, there was a stimulus package going on. People had more money to spend. That was driving up revenues for folks. So I do think there was a pandemic era financial distortion, but I do not think it is a reflection of an underlying problem in the businesses or a fundamental issue long-term for the companies. I think we're seeing just a little bit of a reconciliation. Gravity has re-entered the markets and things are returning to a more normal and sustainable level.